Good morning, everybody. Welcome to today's 1 million by 1 million strategy roundtable for entrepreneurs. 1M by 1M, as you know, is the first and only global virtual accelerator in the world. Our mission is to help 1 million entrepreneurs reach $1 million and beyond in annual revenue. And in support of that mission, we've been doing these free mentoring sessions for over 10 years. So this is the 490th sessions, and it's been absolutely fascinating listening to so many of you from so many different corners of the world, what you are doing, what you're thinking about, and so on and so forth. Over 100,000 people have attended these sessions, and every single recording of the roundtables are available on our YouTube channel, so you can go check that out. This event will also be put on the YouTube channel. The YouTube channel is 1M1M Roundtables. If you're live tweeting today, use hashtag 1M1M, and our Twitter handles are at 1M1M and at Romana. These are the call-in instructions. Remember, this is a roundtable, not a broadcast, so we want you to participate as much as possible. So I will put the slide back up later when we are ready for you to call in. We're going to start today with a conversation with Ray Chan from K5 Ventures. Ray, welcome to the show.
Oh, thank you for the invitation.
You're very welcome. So let's get introduced. Tell us about yourself a little bit, as well as K5 Ventures. What do you like to invest in? What size is the fund? Just get us acquainted.
Sure. Yeah. In fact, I now you said the show has been around for 10 years. That remind me of talking to you. I think maybe 8 years ago or 9 years ago when you first started the show. I still remember that it was a fun conversation. But anyway, so we are based in Southern California, and I manage the K5 Venture Fund, as well as I manage the local Tech Coast Angels sidecar fund. Today I want to focus a bit more on the Tech Coast Angel funds, but we are pretty much have similar focus, similar approach. The reason I want to focus on that is because it's a known entity, but I think it's very powerful in many fashions. So I can dial into that. Both K5 and Tech Coast Angels Ace Fund is around a $15 million fund. But on the Tech Coast Angel Fund is more a fund that actually will be published as soon as the fund run out, just because it is a fund that supported by all the 350 angels, individual angels. So basically, we like to deploy as much as we can, and then as soon as it's run out, then we will have a new fund, and that's why this is the third fund of Tech Coast Angels. So the reason why it's so important is because we are pretty much the anchor investor for most of the angels in the area, and when we invest, we have pretty much demonstrate to the rest of the individual angels that we have gone through some type of due diligence and also research before we deploy the investment. So usually it's being looked at as an anchor investor. And our investment usually is around $200,000, and both K5 is around $250,000 also. But once we invest, we are usually be able to have together bring in other investors to sometimes get up to $1 million to $1.5 million. So this is pretty much the situation that we have.
And what do you like to invest in? I remember we featured you at that time. We were we didn't have you on these shows yet, but we had featured you in a written interview about 9 years ago. How has your investment thesis evolved since then? When you look around, what it looks interesting, and what have you focused on? What have you zeroed in on?
Yeah. So we are still very much a regional focus in terms of industry. We are pretty much agnostic. We don't discriminate anything that we see.
Maureen, somebody is streaming echo. Go ahead, Ray.
Okay. But recently we focused a lot on medical device, and we have not get into blockchain that area yet, just because it's still too new to us. And then also ourselves, we don't have a lot of expertise in those area. But we are tiptoeing into AI area because we have a couple partners are expert in that area, very involved in the AI community. So we are tiptoeing into that area right now. But in terms of industry, we are it's not our focus. Our focus is mostly the people and also the metrics and also the proof of concept, and that pretty much make our decisions that way.
And what stage do you like to invest in? So when you look at proof of concept, what needs to already be in place for your community to write a $200,000 and $250,000 check? What proof points need to already be in place?
Yeah. So in the case of medical device, the proof point would be some type of agreement, a collaboration agreement with some pharma or some bigger device companies, or some type of regulatory approval, being ISO or FDA, and so that varies. And the key thing is we just need somebody else that pretty much give an endorsement of this is indeed a product. And then also, if some agreement is being struck, is on the table, that means we have bigger farmers, bigger companies are interested in this area because they're solving a problem for them. But for the consumer product, is all about metrics, about not just the product, it's not just the features, it's basically how many people actually love the product on a continuous basis. So it varies from the industry and product, but and it doesn't have to be in revenue. It doesn't have to be have millions of download. Product love is something that we focus the most.
Okay, and geography. You said you have a very big geographical focus. How do you define that geography, and how do you constrain that geography? Yeah,
so we do touch on some investment in Canada, and I would say we have maybe 10% of our investment in the outside California, all the way to Midwest or East Coast area, but even more than that. But most of our investments are still, unfortunately, focused within the California and area. So we invest very much into the Northern California and Southern California companies.
Okay. All right. And could you talk a little bit about some of the highlights of your portfolio and give us a sense of when you encountered this company, what did they have by way of proof points, and why did you choose to go into these companies?
Yeah. So, for example, we have one company in Vancouver, and it's a University of British Columbia invention, and it's about this company produce hollow micro needles for farmers or for medical device companies to access the ISF fluid through the skin. So instead of going into subcutaneous, most of the people access the blood to test in terms of different disease. This company allowed a lot of information provided by companies to test the ISF so that it can detect the disease without going into the muscles area. And this way, what it does is it can have very, very minimal invasive patch as application. The reason why we like this company is because the knowledge of this team, and also they're able to get some endorsement from different companies in terms of a lot of conversation. There's some agreement they talk about that they will be able to strike, and because of that, we in that stage is the founders in the knowledge, is in the technology, and then endorsed by a couple KOL, couple the companies, and that's why we invest into this company. The other company we invested is in the Midwest. It's called the first company is called Microdermics. The second company is in the Midwest. It's a totally different space. It's called WeGoLook, and what they do is they help companies or individuals to deploy people all over the country to go and look at, take pictures and evaluate different things from cars when they want to buy a car, buy a house, if they want to buy an antique or things that they don't want to spend the time to fly over the country to take pictures. Excuse me. And they will deploy local people to do it for them. And the reason we found this company through one of the panels, one of the investment panel and pitching event, and this company, actually, excuse me, and this company actually have a lot of traction, a lot of they have deployed a lot of people to take pictures and use very good results, and have people coming back and use it again. So to us, it's kind of no-brainer. And this company actually got eventually bought up by insurance company, because I think insurance company also want to have people to go to different places, look at, assess different things. So there was one of the example. So it depends. Sometimes we will go out to look at them. Sometimes it's through the pitch event, just like yours here. And sometimes we get invited to different speaking panels to expose to different opportunities.
So, Ray, what is your assumption on how much money would it take to build these companies, especially when you're talking about medical device companies, for example? You're putting in a first couple of 100,000, 250,000 check. How much money do you expect these companies to raise, and are you expecting them to get bought by a larger company relatively early to get the full distribution benefit?
very, very good question. Yeah, it is a question asked by so many entrepreneurs. Depending on the size of check that we write and the size and the investor we want to bring on board, depending on one thing, and that one thing is the trigger point, the milestone, and the value that this money will create, and whether this value is enough to increase the value of the company. And so, for example, in the medical device company, so they will say, Raymond, if we want to get the ISO approval or FDA approval, we will need this money over the next year and a half, 2 years to go through. And then we look at, if we get this FDA approval, what is the value of this company? And so we kind of make assessment of the value. And then and then we look at the value that we invest today and see whether the money you invest in, how many times return do we get when we get there. So in case of in the event of consumer products, then we look at the milestone of what they can do to want to accomplish and how much money it takes and how long does it take and whether it's reasonable. And then we say, well, this is a reasonable time and money and the people they need to do it. Then we'll make the decision to write the check. So it all depends on milestone accomplishment and the value they can create from the investment that we put in.
How many companies have you invested in so far?
Wow. Over the last 5, 6, 7 years, we invested, I would say over 100.
Over 100.
Yeah, and of course, a lot of them are has disappeared, and some of them are still going on, but I can't even count how many.
So I guess where I'm going with the question is, what have you learned from investing in these 100 companies in terms of how long does it take to get to FDA? And let's say you put in the first check, and then how long does it take to get to FDA and get to a milestone where you can raise money or get an exit? And how many of these 100 have you gone through with that cycle? Yeah, so
usually we can not look anything beyond the milestone cannot look beyond a year and a half. So because the money we invest together is not a lot, and so when we put in the money, we have looked at can this company with the money they need, people they need to hire, money they need to spend on engineering firm or to spend on marketing. Within the 1 year and a half, can they go to the Series A round or raise a decent seed round? So our the time wise is a year and a half, and we don't usually look beyond that far off. Also, some companies look about is what it takes to break even. So, but breaking even is a good milestone, and so we look at that as a milestone that we invested in, and so but still, it's a year and a half is something we look at only, and then most of companies we know if they fail or they need more money, and we will not right away whether this company indeed has a good team or they just have to need more money to extend the runway. So we can make a decision pretty fast and learn very fast that whether this is a company worth second round or follow-on investment.
Okay. All right, got it. So now what trends are you seeing in your portfolio right now? Who's doing what, and what are the themes that are emerging in your deal flow? Not in the ones that you invested in, but the ones that let's say if you look at the last 12-month deal flow, what's interesting? What are the trends?
For some reason, we look at a lot. We've been looking, getting a lot of healthcare, health-related companies, whether it's digital health or medical device. And for some reason, we see a lot of them coming into our network. But again, Southern California and San Diego we are concentrated with a lot of healthcare-related companies. In terms of tech, it's coming from the Bay Area. In the tech area, we have a lot of people have a lot of throw around a lot of jargon like machine learning, natural language processing, and sometimes if you look under the layer, you find that there's a lot of word throwing around, but the substance is not there. But anyway, I think that type of technology is been the talk of the town, and again, as I mentioned to you, the AI area is huge. But the thing that for a lot of AI companies, they're pretty much concentrated in the Bay Area. So in terms of funding, they are pretty much covered by a lot of investors in the Bay Area. So we don't see a lot of them coming down our way.
And in medical devices or digital health, what are the themes?
I'm sorry?
What are the themes? What kind of medical devices, what kind of digital health companies are you seeing?
Monitoring. I love monitoring companies. I think they follow the trend is basically to monitor the health, track the health, and a lot of going into I would say the understanding the there are a lot of, for example, sleep. But there's a lot of companies that are getting into the sleep, how to improve people. For example, the one company we look at is called Sleep Watch. It's not an app, but actually it will help people to be able to sleep longer in different ways and track them, let them know that the sleeping patterns they have and how to improve the sleeping pattern. So kind of things that look into the health wellness and also monitor the disease management.
Monitoring is very big right now.
Yeah, very, very big. And disease management is also very huge. If you look at the Apple trend, I'm sure because of that, everybody going into the technologies here to help us to understand the body much better because of all these technologies. And because of that, we are able to tap into the platform to get data that we need to understand the body much, much better.
Yeah.
And that's how the AI come in, that's how the machine learning come in, because the massive number of the bits and bytes are huge. And so from there, we're able to understand, for example, at my age and my demographics, what is the right exercise, the right how much time we need to have a better health and better sleep.
Very good. Well, Ray, very helpful overview of what direction your funds are taking, the two funds that you talked about. We'll probably send something your way fairly soon. We have a very early stage medical device company that is looking very interesting. We will definitely ping you on that one.
Good,
all right.
Good.
Well, thank you for sharing your thoughts with us, and we'll talk soon.
We'll talk again in 9 years.
No, this time we're going to talk much sooner.
Okay, sounds good. Thank you much. Appreciate that.
You're very welcome.
Bye-bye.
Okay, well, entrepreneurs, it's going to be your turn to pitch. Let me set expectations a little bit. This is a safe working session. So we are just going to focus on whatever challenges you are facing and try to, add meaningful value to your situation. You don't need to be defensive. You don't need to be nervous. Just, tell us what is it that you need help with, and we'll try to address those points. You may disagree with my feedback. That happens. And all I would say is that it's your company. It's your decisions. What strategy you will follow is going to be your decision. Don't feel bad if you disagree. Just consider the feedback and make your choices. One thing you will have to remember, though, is that not all businesses can raise money. Not all businesses should raise money, and raising money doesn't guarantee success. That is a fact. That is a non-negotiable fact. So we're going to start with Sriniva Mandali. Srinivas, please unmute your line and tell us what you're doing.
You can hear me, right? Everybody can hear me, right?
Yes, we can hear you. Go ahead.
So I'm a co-founder of Locol Cabs, which is predominantly a cab aggregator. We want to be a platform in transportation industry, so we want to cater that. Can I go to the next slide? Yeah. So it's a more common vision that you can talk about. We are focused on redefining mobility to create a distinctive customer experience and making everyday travel safe and reliable and comfortable. Saying that, we are not only looking at point-to-point today, we are looking at more on a B2B corporate travel mode, where everyday employees travel to the office and from metros and stuff like that. So we want to solve those problems and be more reliable. And why we say safe is because of, especially we are operating in India. Today, there are a lot of non-companies are not, cab services are not considered as safe as it is actually. So coming to this slide, I am Sriniva Nag Mandali, the COO. My CEO is actually traveling and my CTO is also busy, so they could not join this call. But ideally they wanted to join this call, but since they are traveling, they could not join this call. So you can see the experience, they come from different domains, and I come from my ex-company was Uber in Bangalore. So I do understand the domain knowledge of this industry itself.
What did you do for Uber?
So I was handling driver operations predominantly, which was into like, and also was handling a leasing entity for entire Uber Bangalore team. So we have a couple of advisors, investors. So coming to my company profile, we started incorporate as a company in Jan. We launched on a B2C service, so we felt it is a more investment prone game. So we said that, okay, that's not a model we cannot sustain the company for too long if you are going in that model. So we pivoted to B2B model. So we got a agreement, basically an MOU with a tours and travel company called TripNetra. And also we are in talks with the government to launch Hyderabad last metro. It just got delayed because of a few reasons in Hyderabad, but we will soon start on November 1st. So
what does that mean? So what are you going to do for the tour company? What are you going to do for the government?
So for the tour companies, see, all these tour companies advertise their package tours, but they still require cars or for their customers to travel, right? Ideally, they don't own the fleet. This company doesn't own the fleet, or they are not in tie with that. So we aggregate the cars in the region across India. We have we aggregate with the thing. So if you want if you're coming from US, and just example, right? You're coming to Hyderabad and you want to look at the nearby tourist place in Hyderabad, right? You still need a car. But the TripNetra basically sells the package. We provide the transportation for the TripNetra company. So they are only on package.
So the question I'm asking is, conceivably, tours could be a major segment, B2B segment for you, how big is that segment? Have you done a TAM analysis on how much business you can do for that category?
So you can see, if you look at the entire market which is unorganized today, it's almost $4 to $5 billion in India. When I say
just tour operators,
yeah,
car for tour operators. You're talking about you providing cars into tour operators. That's a $4 to $5 billion market.
Yeah, that's a total. That's pan India. Yeah.
Okay. All right. We need to dig into that. So keep going. What was the government use case?
So government use case is basically the metros. So you see a lot of metros coming in India, but the metros occupancy is not getting more because of the last mile connectivity. When I say last mile, from the metro, there's no reliable commute to your home or office. So a lot of people still use their cars or their own private vehicles. So that is creating a lot of congestion. So we are providing a solution. We are in the final talks to launch in Hyderabad, which is a model where we use captive supply. Where here we don't aggregate the cars. We use we have a set of fleet owners who are tied up only to do the metros, and they're fixed like a bus route, right? But the cabs and autos, you are working with them. We are in process to get electrical autos to this segment because it is more convincing for the government or the metro, because that makes pollution free, especially like in a city like Delhi, right?
But what is the metro the government going to do? Are they going to? They're going to put a route together that is kind of like a bus route that the city will pay for?
No, at the end of the day, the consumers who are directly paying us there, but what they give us today is the agreement is that they give marketing, they do marketing in the metros, one. Second, pickup and parking spots at the metro stations, right? You need and that is more important because if that is not happening, then the current Uber and Olas are not doing exactly solving the problem today. And so we want to solve that very focused to metro. And the agreement is like you provide parking and the marketing. We look at operations economically. That's the agreement, and the technology is also us. So we provide an application. Today, we are in process of changing the applications to both the segments as we speak.
Okay, great. All right.
Yeah. So these are larger market where we want to focus. Why we said chain of hotels is because after a certain point of time, you see people coming to hotels and then deciding where to go, how to go. Right?
Yeah. Sure.
Yeah. So that's where we want to focus, and you can see this is a longer vision where the entire market that we want to focus in India, and we are in talks to talk to a couple of other players in a couple of countries where they want to franchise out the product and launch their operation. So that's still in talks. So this is the exact solution that we are promising for metro, but it depends on different metros in cities. Like each city will have a different terms, but these are more or less the same solution that will go for metro. Like for example, so this is a little bit of financial projections as of today, which we have estimated, and these are based on some investments that also we got into the company.
So I'll tell you what's missing from here. This doesn't feel like an investor pitch to me. It's just a concept pitch. It's missing all the pieces that an investor pitch is supposed to have, and most importantly, a very granular bottom-up TAM analysis is missing. And especially because you're going to market with a certain specific set of use cases, those use cases need to be fleshed out in what is the marketing strategy for that to get all the cities on board, to get these hotels on board, to get the tour companies on board. How are you getting them? And then what is your revenue potential from each of those markets? I mean, 4 to 5 billion, is that the total amount of revenue that the tour segment, for instance, generates in India? But what is your revenue potential within that market? What is your TAM? If you have 100% of that market, what is the TAM that you can get?
To be really frank, we are cut on some slides because of some of the times. So we had some of the information of how we get that marketing and everything which I can share with later after this call. But if you're looking at that market, what is our revenue? I think you can find it right here, right? We're not focusing the entire market. We are trying to focus 10% of that market. When I say 10% of the market.
But a revenue projection and a TAM analysis are never the same.
Yeah, I'm not
revenue,
saying the same.
Revenue projection is a percentage of TAM. Nobody projects revenues to be 100% of TAM, right? It's not believable.
Yeah, so that's what I'm saying. We are saying we are trying to focus 10% of the market, and we might end up getting 2 to 5% in the first 2 years, and ending up in 4 to 5 years 10% of the market share in the entire thing. Right now, there are challenges for that, right? One is that entire Indian ecosystem is not digitized on the outstation market. Thanks to Uber and Ola, the point-to-point city market is digitized. That means that there is GPS in the either the mobile or a physical GPS in the car. So that is giving digital data to the companies. But when you're going into the city, that is not still happening. So that is where we want to digitize that market. So those are the projections. In terms of
conceptually it sounds fine. What are your questions? What are you trying to get out of this call? Makes a lot of sense. What you're talking about makes a lot of sense.
We want some couple of connects. We're looking at to raise next 500K investment for our startup to actually have a runway till 1-2 years, so that we don't have any. We are focused on the business as founders and not worry about the funds. That is one. Second, as you said, right, feedback, right? I just attend sessions just to get a feedback from others and some of the loopholes that we might not even think at this point of time.
So on the question of connections, you should hang on. I will explain how to use the 1 million by 1 million program. We have a significant Rolodex that we open up for all our entrepreneurs, but you need to be a member of 1 million by 1 million to access that. And as far as feedback is concerned, I think this pitch needs to be altered to be a full-fledged investment pitch. Other than that, your concepts are there. I think it's a question of how you pitch it and how you cover all the pieces that investors are looking for in this determining, a professional investor pitch. And you're saying that you have a lot of that material outside of this presentation. That's great. So you just need to bring that in, and I need to be convinced that you have your investor pitch ready, and then that is what we use to make those introductions.
Thanks a lot. I think if I want to add more, couple of points which I would just want to add to that. So what is we want to do apart from this first 2-3 years, right? After we build this business, is one second. Sorry. Is that we want to create one-stop solution for your packaging tours, right? Right now we are going to 2-3 places.
I think that is a very interesting market. That market could be very interesting, and if you can, what I would like to understand at a much more granular level is what is the go-to-market strategy for that market? What is the TAM for that market? What is the segmentation in that market? That market is a very fragmented market. So what is the cost of sales of that market? What is the sales cycle into that market? Or there are a lot of strategy points that as an investor, if I put my investor hat on, I would need to understand to be able to determine, is this market going to scale fast? Because the whole name of the game in venture-funded businesses is, can you go from $0 to $100 million in 5 to 7 years? And with this strategy that you're talking about, can we do that? Is that a segment that will give us high velocity market adoption quickly?
Yeah. On the metro side, we can go pan India within 6 months. That I can say. So that involves into smart cities, which is like 20 cities that can come. We are not only looking at metros, we are looking at bus stations and last mile connectivity.
The question is not that you can go rapidly. The question is, can you convince the cities to go rapidly with you? Because this is not an operations question. This is a sales question. Are the cities ready to buy at that pace? In 6 months, you may have fleets ready in 20 cities. That doesn't mean those 20 cities are ready to buy from you. That is the issue here. It's the go-to-market strategy that is, kind of thin here.
Okay, I think what I'll do is that I'll share you more on the document side. That will be a lot easier after this call. I think
no point. I'm not going to look at anything you send me unless you are a member of the program. So just hang on for a second. I will explain to you how to use the program. And if you decide that you want to use this program to get to the next level, then you follow the instructions of the program and take it from there.
Okay, fine.
Okay? So just a second. Let me finish talking to the other guys and we'll come back to you. Okay, ViaMaan is the next one. Rahul Sharma from Bangalore.
Hey, good morning, Astronomna.
Good morning.
So,
how are you?
Hey, I'm doing great. So I'm from ViaMaan. We are an India and US cross-border company. We are working on aerial cargo. Our theme is low-cost aerial cargo for expensive middle mile.
Mm-hmm.
Next slide, yeah. So the problem that we are solving, right, is it's been told to us by a couple of CEOs of Indian third-party logistic companies. So their problem is high cost in middle mile e-commerce fulfillment centers, and mainly in tier 2 cities and rural cargo hubs. So they have Tata Ace and Tata 407 trucks which run almost empty. And along with that, the problem that comes to them is that they have slow trucks, right? And it takes a lot of time for these trucks to come to destinations. So most of them come at the same time, and at the peak time, they have to have more labor and space, which increases their costs. So this is the problem that we are looking at. And the solution, which is on the next slide, please. Solution is an 80-kilometer autonomous electric aerial vehicle with 150 kg payload. So one of the great things about it, it's a range, an 80-kilometer range, and a payload of 150 kg. So this suits very well for the low volume e-commerce cargo. So for customers, it saves time because of higher speed and shorter aerial distances. And the money cost is actually less because of lower electric flight costs. And the customers are able to save labor and space because we can have quick, short, multiple runs. And instead of, all the shipments for them coming at one time, they can have lesser labor who keeps on working instead of having them empty as in. So market validation that we have done is so the solution as such, so we showed the aerial vehicle to a couple of logistic company CEOs, and they proposed this fulfillment hub-to-hub center delivery, solution to us. So one of the top Indian e-commerce delivery partners has mentioned that, they have 117 semi-urban fulfillment centers, which cater to, each one of them caters to 5 rural hubs. And our vehicle in long run can be used in all these places. So that's the market validation we have done. So just the India market size as such, right, by 2025, so it's $10 billion in e-commerce cargo. So when we look at the semi-urban and rural middle mile, it's, so now the tier 2 and tier 3 cities are almost 50% of the shipments. And we are looking at, $750 million over there at 7.5%. 15% of the cost, for this particular leg. And our thing is, we are just looking at 2.5% of serviceable market, and our revenues are going to be 19 million just in India. And the reason we first focus on India is because we want to make sure the business plan is perfect, our operational considerations are taken care of. And by 2022, we start slowly in US and we move over there. Next slide, please. So business model as such, so we'll partner with fulfillment companies, the third-party logistic companies for a B2B model, and we'll be transporting for hub-to-hub cargo in semi-urban and rural areas for them. Our charges are going to be per kilometer. So what we see is with 16 daily trips and just 830 vehicles, by 2028 we can do 484K annual trips. And roughly at $1 for a 65-kilometer trip and $0.35 in India, what we see is $262 million in revenue. And the good thing is we don't scale up to thousands of vehicles. We have seen how many distribution centers are there, how many vehicles we can build, how many we can operationalize. That's why we came to a number which is around 830 vehicles. Any questions up here?
What is the cost of building a vehicle?
So today, when we are building prototypes, it's expensive. It's turning out to be around 200K. So when we do a mass scale production, 200K, yeah. And the bigger cost is batteries and the motors.
So what is the break even? How many trips? How much? What is the equation of what is the unit economics of this business?
Okay. So the thing is, it's different in India and US. So I'll talk probably about US first. So when we get 8 trips.
Why do you talk about US first? You've only validated this in India, right?
Sure, I'll talk about India as well. So in India, what we see is that 26.5 rupees per kilometer. When we have a 40-kilometer ride, a single trip, and we are going to be having 10 rides a day, we are having break even. So that's like 400 kilometers. 10 rides a day, yeah.
But 10 rides a day for how long?
So this is a 40-kilometer trip. Our speed is 125 kilometers per hour. So the flight time is going to be just close to 20 minutes. And rest of the time, what we say is, the loading, unloading it takes. So roughly what we are saying is 10 operational hours for loading, unloading, as well as flight time.
No, but my question is, how many days of this? You're doing 10 trips a day, but for how long do you need to do this? Like, is it 3 months break even, 5-month break even, 12-month break even? What are we talking about?
Per unit break even or the whole business break even?
Per unit, one company, So to break even, you're saying you need the vehicle to operate 10 hours a day. For how long?
It's annual, right? That's how we came at the cost. So 26.5 rupees in that, what we have is so that's the revenue, and 26.5 rupees into 40 kilometers into 10 rides. That's my daily revenue.
Oh, so you're talking about just the operational break even. I'm asking you also about how much does it take to recover the investment that you're making? So if each vehicle costs 200K to build, how long does it take you to break even? Not just operational break even, but recovering the whole, like this 200K there's a cost of capital. There's cost of goods sold, manufacturing costs, etc. So this is the 200K investment plus there's whether it's debt servicing or whatever of that vehicle. So how long does it take for you to recover that investment?
Yeah. So our thing is, when we go up to scale, we are not going to be putting that 200K up front. So it's going to be like a lease model. So we're going to be taking like a bank loan, and the EMI that works out is $1,000, like roughly 70,000 rupees per month.
That's the loan servicing cost.
Yeah. So if I do the loan servicing.
But how is the loan getting paid back? How long does it take to get the loan paid back?
4 years.
Sounds like a very low margin business, actually.
If we go to the next set of slides, so this is, if we move on to the next, So, so initially when the number of daily rides is like 7, 8, it's a low margin. But as we scale up and we are able to do 12 rides a day, you'll see the profits increasing. So it's like roughly a 40 to 45% margin business.
So the issue here is that it seems like the early part of the development is very slow growth.
The reason we are taking it, Yeah, yeah. So the reason we are taking it slow is that we want to validate. See, it's an aerial vehicle, so it's you can't just say I'm going to be doing 400 kilometers per day in the first year itself. First couple of years we are taking it slow, and then once it is validated, the business is validated. That's when we start taking it up. We start increasing the production.
Okay. So, what are your questions?
Question, what do you think? Is it fundable? At what stage we should be going for funding? So if you go and look back, right? So the uh, first year, this year, right? So we have been doing this for bootstrapping for almost 18 months now. And we came to a stage where we have prototype. And what we need the money is for building the vehicle as well as doing some pilot test run in India. So do
I
you
think
think
the
it's the
only
right?
way this is going to be fundable at the moment is, this company that you were showing that has 117 fulfillment centers that is interested in doing this with you. Get them to fund you. Get them to advance you the money and give you an order to custom build these vehicles so that however many that they want to buy to start the process, because I think this is not fundable in a regular venture fund model unless you have a partner like that coming on board. Once you get that and you validate that yes, there is demand, there is an e-commerce company that is interested enough in this that they're willing to give you an order and so on and so forth, then the VCs are willing to come in, I think. But if you don't have that level of confidence, VCs in India are not the big risk takers, so I don't think you will be able to convince somebody to do this.
Okay, so we are primarily a US registered company. And we are first of all doing these POC runs in India because the cost of doing POC run in India is low. So, so what you're saying is VCs in India are not going to be funding this. What about VCs in US?
Same thing. I think you're going to need some validation, some way of what is the competitive landscape in the US? There's a lot going on in aerial transportation in the US. So have you done a competitive analysis of this kind of stuff in the US?
Sure. If you could just hop onto the subsequent slide. So there's a competitors. Yeah. So these are the competitors we have. So there is Vahana, which is one of the main ones, and a company called Volocopter, Lilium, and EHang. So the biggest problem is range with them, right? And the payload. So these are the companies that we are competing with.
And what is the funding situation with any of these?
So the way it happened is first, let's pick up Volocopter. They got 1.5 million funding initially to build the prototype. Once they had the prototype for making a full-scale vehicle, they got a 36 million funding. Similarly, Lilium got a 1.5 million to build the quarter-scale prototype first. Then they got a 3.5 million for building, a half-scale. Post that, they got the 90 million funding.
And these are all going after the same market that you're going after? The cargo market?
They are going after passenger.
Passenger, okay. So that's a different business. That's a completely different business. Is anybody going after the cargo market?
There's a company called Plug Auto and Boeing and DHL. But they are not funded per se. I mean, like Boeing is, doing it on its own. DHL is spending its own money, so they're not like outside startup sort of things.
And what do you know about Boeing's efforts and DHL's efforts? Obviously, they have all the expertise and they have plenty of capital to fund their internal R&D projects. What do you know? How far along are they, or have they started deploying these things?
So what they have done is they have, been able to build what we call iron birds. So they are like, just structural frames, and they put on the wiring and, they power up the motors. And the published range as well as the size that they have is something like 20 kilometers, where, they are not operationally feasible.
So that's, I think, if you want to get funding, this may be, those are the kinds of places that you're likely to get funding from. You can research who funded these Volocopter and these kinds of companies and see who the players are and what their appetite is for funding something like this. You're more likely to be able to raise funding in the U.S. if you go after the U.S. market, but for that you're going to have to be in the U.S. But U.S. investors don't tend to fund things, very early stage things, concept stage stuff, or very early stage stuff like your company in a remote way. So that's something that you have to take into account.
Okay, so we are based out of Washington, and if we could, so we are based out of Washington, and primarily, as I said, right, we are a US-based company where R&D is out of India, and our co-founder, Mr. Shwetal Mehta, he's in US, and our aerospace lead, Dr. Rajneesh Singh, is also in US. So both of them are on East Coast. So only thing is, the first time we are doing POC in India is to save on the expensive cost of doing POC in US.
So figure out, who has been funding these companies that you talked about that have raised funding, and those are most likely the people you're going to need to approach.
Okay.
Because every Tom, Dick, and Harry VC in the US are not going to fund these kinds of ventures. They fund B2B SaaS. They don't fund aerial vehicles. It's a category that is not, not everybody funds this kind of category. There are people who will look at it. There are, but do the research on who are those people who have some appetite for this type of stuff.
Sure.
Okay.
Yeah.
All right.
So
does 1M does it help me in any way?
This is not a category where we have any expertise, so I'm not going to tell you that we know how to do this at all. We also know how to do the B2B SaaS and the healthcare IT and the B2C, digital B2C, that kind of stuff. We mostly do IT and IT-enabled services. We don't do this kind of stuff. So, I'm giving you some general advice based on my knowledge of the industry and the funding process and so forth. So,
Sure.
So I wouldn't say I have any specialized knowledge at all in this category.
Okay.
Good luck, though.
Yeah, thank you.
All right, DJ Rao, you're up next.
Thank you. Good morning and good evening.
Good morning.
Participants from India. So
you need to speak up. We can't hear you. You're mumbling.
Are you able to hear me now?
Yes, that's better. Go on.
Yeah. I'm in Reno, Nevada. We have our team. We are into fitness and wellness. We built a application, mobile app, so it's to the consumer. The live version was from July 2018. However, the new version is going on Monday. So the real live version with all the updates will be available this Monday. So it's available on iOS as well as Android. So there are many fitness apps in the market, and how are we different? There is so much going on, like artificial intelligence, machine learning, goals, everything. We are not into that. We are simply disciplined fitness company with martial arts knowledge. So we are into functional fitness and no extra metrics. Only wellness is the metrics and lifestyle. So next slide, please. So CEO is in Reno. He's born and brought up in Reno. He's a world champion. He won a lot of gold medals in Taekwondo. He's a black belt, 5th degree, and he is training all the US team members in Reno. So I am CTO. I am helping with the project. Basically, I am an ERP consultant. Never worked out, no fitness at all, but I had to, I used to go to this gym with my son for Taekwondo. That's when things changed. I used to work with 2 laptops, helping all the clients in US, and also in the evening. He said, get out, don't come here with your laptops. If you come here, you work out. So that's when I landed. From past 3 years, I partnered with him. That's how the story started. I invested money into this company. So the very first one in the left side, he is in San Francisco. He's Arjun Dhingra. He is a US team captain. He is a 6th degree, and several times he is a gold medal champion from like world competitions. And then there are many such instructors who are available, who are helping us bring up the content. So we are at a stage where technically we have the app, we have the content. Now we are editing it and uploading into this app. So mostly it's martial arts driven, with even adding with all the breathing, yoga, and all the disciplines into this app. So we are very lean. We started from 2 years, 6 months. We spent $400K USD. We have the product. There are some users, and we have the final version going on Monday. And then
what is the price of the app?
It's free. It's free as of now.
So how are you going to make money?
Exactly. Yeah. If you go to the slide before, one of the options is we got an opportunity to model for Century Martial Arts. We are on the magazine for them. Our CEO is featured in their magazine, and they are interested. Century company is interested with us to have their products integrated into our app. That is our first major milestone.
What is the product? What is their product?
Their product should be like exactly those Century bags and Century gloves, and there are many martial arts products they sell, and there are almost 30,000 studios, martial arts studios all over the world, and with at least average 200 students in each studio. So they have their own marketing campaign. However, they are looking for avenues like these apps, fitness apps, where they can promote their products. So, we still have to come up with the numbers. We are meeting them on November 7th, 8th, 9th, how we can integrate and incorporate. So, at a very early stage.
So, how are you going to get your audience? How does this product, how does this app get in the hands of people? You launched this product app earlier this year. Do you have a lot of users already?
No. Actually, it's a prototype. We don't have more than 1,000 users. We never spent money on advertisement. We are waiting. We are planning to advertise from November this year, and do the influencer marketing, social media, and start our regular advertising. And the support we need is how to position this. We have no clue how to position. We are only good with the subject in the fitness area. We are good with the technical aspect of how to develop, get the content, and upload. We are looking for a person from marketing perspective who can come on board and help us and position this product, and also who can invest with us and grow with us. So this is what we are looking at. We still have work to do. We are not complete. We have to, we are looking at another 2 years of work in this to learn as we grow. since we
No one
are
is
in
going to
this,
fund you to learn.
sorry?
No one is going to fund you to learn.
Yes, yeah. We are not very keen on the funding too. We are trying to scale up. If we get the funding, we are good. If not, we will make this as a bootstrap company. We'll learn. We'll get.
You're going to have to
market.
forget about funding. You're going to have to bootstrap to some kind of strategy. Right now, you don't have a strategy. What I see here is a beginning concept and some development work that you've done. There is no strategy. You really need to learn how to build an app company, and there's a tremendous amount of learning curve that you're going to need to traverse at this point.
I absolutely understand. That's the reason why I wanted to come over here and see what options are there, and we are ready to learn. We absolutely understand where we are. So thank you very much.
Okay, so hang on for a bit. Let me finish talking to the other two people, and then I'm going to talk about how to use the program to achieve whatever things that each of you are trying to achieve. I'll just explain to you how to use the 1M program for your purposes. Okay?
Yeah, thank you.
You're welcome. Abi?
Yeah, good morning.
So you should explain what you are doing and then go straight to the piece that we need to discuss. So folks, Abi is a member of the 1M Premium program, and he's working on an investor pitch. He'll tell you a little bit about what he's doing, and then we'll go straight to the section that we need to work on. We've been working on his investor pitch in the private roundtables for a few weeks now.
Yeah.
Go on.
Perfect, yeah. Great, thanks, Shramana. Yeah. So this is Abi Karibuddaiah. I'm the founder of WellWrap. We are the first wearable orthopedic wraps for joint pain relief. And we are launching our first product, which is the knee wrap. It uses low-level laser technology. It's a proven technology, if I may add. And for the first time, we'll be collecting pain and vitals data like blood pressure and temperature as well, and making it available for doctors for better patient outcomes. Next slide, please. Yeah.
I'm going to skip through all this, huh?
Yeah, please. Yeah.
The financial section that you want to talk about this here.
Well, actually, these two, right here, if I may. I just reorganized some of the information on the TAM and explicitly stated that it is for the knee wrap and for the U.S. market.
Mm-hmm.
Next slide, please. And then I switched to that our next business model opportunities are that we are a multiple product company, and the TAM for each of these.
So next business model is not the way to present this. This is basically a product roadmap.
Okay, got it. Yeah, got it.
Right, product roadmap, and you're going to go to a multiple product portfolio in due course.
Got it. Yeah. So I'll
rechange
the title for
slide look weird? Like you're.
It should come out okay on. I don't know what happened here, but.
Anyway, adjust that before you.
Okay. Sounds
finalize.
Good.
Yeah. Okay.
Yeah. And then continued on from the business model perspective, it's the multiple markets. Our vision is to become the leader
so
in
again, next
wearable
business model is not the right phrase there. If you're going to just basically say market roadmap, product roadmap, and then market roadmap that you have physical trainers and chiropractors, consumer market, fitness market, etc.
Yeah, perfect. Yeah. So, and then this totals to the $6.7 billion TAM total. I think we covered this. We go straight to the financials.
Where is that total? Where did you put that total?
I didn't put it. I mean, you can just kind of add it right here.
Just put that in. Put that in somewhere.
Okay. Sounds good. Total TAM of $6.7 billion. Okay. Then FDA, I think we covered this. Nothing has changed. We covered this. Next. So in a commercialization strategy, I added the other health channels like the fitness clubs and the retirement homes and communities.
Mm-hmm.
We covered intellectual property. Okay, and here comes to the financial side. So the funding and milestones is it's segmented as currently we have raised about $110,000, and what we have completed is product and market validation and the patents. What we're looking for next is $100,000, and the milestones, we want to complete about 20 to 30 production-ready products. There's going to be still some design left to accomplish, and we want to get it into the hands of the doctors and get the market validation. And we also want to launch the mobile and SaaS solution and start the FDA clearance process for the NHN, and then we prepare for the seed round milestones, as well. So that's what we want to accomplish with the 100K.
The patent is issued or just filed?
It's filed, yeah. It's patent pending right now, yeah.
So you should say that patent filed. This sounds like the patent is issued, which puts you in a very different category.
Okay. Great. Yeah. Thanks for the advice. I'll change that. And we want to file design patents as well, which is we're in the process of preparing that. The next capital requirements, which is really the seed round, we want to raise a $1.2 million, and I have a breakdown of how we're going to spend. I'm happy to furnish that to you. And the milestones that we want to complete from that is to complete the FDA clearance, which takes about 6 months to 8 months. And we actually launch the marketing campaign along with the distributor and lock down the manufacturing process and have 2,000 units ready for the market.
So you're not doing crowdsourcing and all that anymore?
We are pursuing that, but I'm not listing that out. I'm not calling that out per se, as yet.
Okay.
Yeah.
All right.
Then the financial projections is basically 2019 to 2021, what we expect to accomplish in the latter part of 2019. And we're looking at about 1,900 units sold in 2019, with partnering with about 620 clinics. And then the COGS, we're looking at 2019.
1,800 units in 2019 through what channel?
Through the physical therapist channels, and we're looking at partnering with about 620 of those folks.
How do you partner with these people? You're going to have to partner with them one by one by one. Do you know how much time it takes to close 620 deals? And what kind of a sales process to do that?
Yeah, I was thinking of a combination of, I have got about approximately 100 paying clinics already on LinkedIn that I can target. I already haven't opened up the channel with them. And then also I was thinking of web PT. If we align with them, or can I assume that we will do something with them and open up the channels through them?
But have you had any conversation with them?
No, not at all. It's an assumption, based, but and we're looking at selling all.
I'm not saying that we shouldn't talk to. I think Web PT is the first company that we should be talking to. But all I'm saying is that you should point out when you have that conversation. You should point out before you go to talk to anybody else. We kind of need to talk to Web PT and figure out if this is a possibility. Otherwise, you can't defend that storyline.
Right. I agree. Yeah, agreed.
Because I think, my guess is your numbers are too aggressive here.
Okay.
I don't think you will be able to make $600,000 in 2019, nor would you be able to make $5 million in 2020, and nor would you be able to make $13 million in 2021. So I think you need to get a lot more realistic about these numbers, keeping in mind the fact that you're going to have to sell to these, physical therapists one by one. And, they're not going to ramp up that quickly. So I think, given where things are, that you're going to have to do the trials, it's going to take, 6 months. I don't know what the sales cycle is when you give them the trial units, and then how long will they take to do the trials and so forth. I would say, put this thing back by a whole year. I would say, 2019 show just a minimum amount of revenue.
Okay.
Maybe 2020 you start showing real revenue. 2021, significant revenue, but don't go so aggressively.
Okay.
I don't think you can defend these kinds of numbers. Frankly,
Okay.
It just doesn't make sense. I just don't see how we achieve these numbers.
Got it. Yeah. It's better to have over-deliver with low expectations rather than the other way around. Definitely.
Not entirely, because if it's too low, then nobody's interested in funding it either. So remember always the point that people are going to try. VCs are trying to go from 0 to 100 million in 5 to 7 years. So you will need to meet that criteria, but you're going to need to defend that story of how are you going to meet that criteria. The thought process that is missing from all this is that the logical thing of how are you going to close these deals? What is the sales cycle? How many units are you going to sell through each of those partners? How are you going to come? How long does it take you to close these partners? And how much revenue are they going to generate? So what is the model supporting these kinds of numbers? You can't just stick numbers, right? You have to have a logic behind that number.
Yeah, no, I have a model. Yeah, that's how I develop these. But in terms of it is too aggressive from your thought process. I definitely see that. So I just need to be able to scale down, and it takes approximately a month
you have to
for them to
through those and be able to answer those questions. If you ask the questions I am asking you of yourself, it should strike you that this doesn't make any sense. Nonsensical aggression doesn't really achieve results, right? It has to be logical and rational. You have to be able to recruit these partners. You have to put them through the trial process, and that is going to take such and such time. What are those assumptions? Stick all those assumptions into your spreadsheet, and then derive something that holds together, hangs together as a storyline before you can present these numbers. So go do this over again. And stick really realistic assumptions of precisely how are you going to go to market, precisely what kind of sales cycles, what is realistic, etc.
Okay, sounds good.
Okay, that's your next step. And yes, we're going to go to WebPD first, but we need something that WebPD can look at and think, okay, yeah, this makes sense.
Great, yeah. Can I just go to the previous slide, please, if you don't mind? I just added one more slide, but that's okay. Just a key takeaway. The last slide. The next slide, please. Yeah. I just added these points as key takeaways from the market risk and data. And
you have not removed market risk at all. You have only removed. Well, you haven't really even removed product risk. So you haven't removed these risks. Product and market risks are all there.
Okay. Well, I took it from I validated with potential customers with arthritis patients.
You validated the concept. The product hasn't really been in the hands of customers yet.
Like a production one. Okay. Yeah, sounds good. Yeah. I'll reword that. Yeah.
Okay. All right. So I think I've told you what we need. Yeah? Okay. All right. Okay, folks, I'm going to go to the next segment and explain to you how to use the program. Several of you need that explanation. So that's what we're going to do next. Before I do that, though, I'm going to ask you to bring in serious entrepreneurs into 1M by 1M. As you can see, we do really hardcore work, right? We get really deep into strategy. We really get deep into the pitches and so forth. So you're going to have to do a lot of work, and it takes a lot of years to build a serious company. All the resources start at 1Mby1M.com. This is a virtual program, so you can access the entire program through 1Mby1M.com. We have a great blog. Just by following the blog, you're going to learn a lot. The Entrepreneur Journeys book series is 12 books that have 12 to 16 case studies each, and they offer you perspective into various topics. That's a good learning tool as well. These roundtables happen every week. This is our 419th roundtable. So it's a body of learning material and the recordings thereof that you can use to learn as well. Our full acceleration program is 1M by 1M Premium, and there you have extensive methodology guidance, access to our online curriculum through which you do the learning, the methodology learning. So this is one of the key pieces that all of you who are kind of doing this for the first time and feeling a little bit lost, right? This is very complex. Entrepreneurship is very complex. You have to do product, you have to do marketing, you have to do customer acquisition, you have to figure out a financing strategy, you have to be able to communicate what you're trying to do. There are so many pieces to it, and it's really complicated. So it helps to follow a methodology. It helps to follow a curriculum through which you can rapidly and efficiently learn. So this curriculum is a great curriculum. It's a proven curriculum. It has been in the market now for over 8 years. So you can go ahead and use the curriculum and bridge a lot of that learning gap right away. That we strongly recommend that. We do help you with business development where we have relationships. So for example, we have relationships at Apple. People who are doing apps for the iOS, we have relationships, we have worked with their worldwide developer relations and so on and so forth. You will find, if that's something that you're trying to access and you need guidance on that, we have relationships. So that's just an example. Where we have relationships, you have access to our entire Rolodex if you are a premium member. We help you intensely with this kind of strategy consulting. What I was just doing with Abi, we've gone through many iterations. Abi and I have gone through many iterations over the time that he's been a member of the program. You go through similar iterations in private roundtables and sometimes public roundtables when you need a quick slot to run something by me. That is the strategy consulting. You can call it strategy consulting, you can call it mentoring, coaching, whatever. It's the project-based interactive piece of the premium program. And then we also help you with financing. We have a large Rolodex of financiers. You can go to the seed capital section on the blog and read interview after interview. You listened to one earlier today. So there is there are a lot of investors who work with us. You're going to need to learn how those investors think, shortlist. We will help you, but you're going to need to shortlist who those investors are. Where you need product market fit, you need an investor entrepreneur fit. And that's all that needs to be worked out, and then we introduce you to the right people when you are ready, when we think that you're fundable. And then we have a lot of clout in the media, so we try to get some material out about your company before we send you out there for financing and so forth, so that you have some social proof that people, there's buzz out there about you, and people know that yes, you're a player in your market segment. Go to the 1M by 1M self-assessment and start asking yourself these questions. These are the questions investors will ask you. You should ask these questions of yourselves. If you get stuck on methodology points, go to 1M by 1M Basic, which is our curriculum-only offer. That's just $99 a month. Just spend substantial amount of time digesting the curriculum and learning what you need to learn. There's no substitute for self-learning at this point because of all the things that you need to master. There's no choice. So anyway, go to the website. There's lots of material. Dig around what to expect from premium, what to expect from basic, FAQs, video FAQs, how are investor introductions made, description about the curriculum, what you learn, how you learn. This is a case study-based program. We have close to 900 entrepreneurs who have been part of the case study process and ongoing, and we have captured their case studies in detail and woven them into our curriculum. So that's how it works. lots of entrepreneur interviews, investor interviews, thought leadership interviews, video lectures. That's how this program is structured. There's nothing like this program, by the way, out there. It's an entirely homegrown curriculum. We don't license material from anybody. It's entirely a curriculum that we have developed internally over a 12-year period. The methodology is lean, capital efficient, bootstrap startups. The philosophy is bootstrap first, raise money later. And that's pretty much it. This year, we have another 6 public roundtables. So 1 more in October, 3 in November, actually 4 in November, and then 1 in December. I'm traveling from Thanksgiving on to mid-December. I am traveling in Europe. And then rendezvous, which are our in-person meeting opportunities in Silicon Valley at Cafe Boroni in Menlo Park. We have 4 more, 1 in October, 2 in November, 1 in December. So if you're either based here or coming by for, visiting from somewhere else, please do stop by, and happy to get together at one of these rendezvous. That's it. Open for Q&A. You're welcome to call in or ask questions in public chat. Let me introduce you also to Irina Patterson, who is your contact on the 1Million by 1Million team. If you have questions about the program, feel free to contact Irina at 1Mby1M.com. And that is all I have today. If you have questions, I'll take the questions. Otherwise, we're going to adjourn. Anybody, folks? Questions? Those who have pitched, who had questions about the program, did I answer all your questions? Rahul, DJ?
Thank you very much for your time. This is very useful, and probably
you're very welcome.
We will try to join and learn more. Basically, we are lacking a marketing strategist and how to position our market. This is one of the startup, and we have many others. But we'll go with this first.
All right. Anybody else? David Lasore is in the concept state, spinning wheels and not gaining traction. So you need to start following the methodology, David. My recommendation would be just start following the methodology and start figuring out why you are spinning wheels and not getting traction. The process, the methodology will get you those answers. Rahul Sharma, you mentioned about revenue growth being slow in the beginning for ViaMaan. Yes. What about that? Okay. Good, David. See you next week. Rahul, what is your question? See, you have to keep one thing in mind, Rahul. VCs are trying to go from 0 to $100 million in 5 to 7 years. At the same time, you have to be able to be credible that your early growth rates are reasonable. So as long as you have an inflection point at some point, let's say you have a slow growth early stage, but that there's a reasonable inflection point that is going to then take things to the accelerated pace and deliver the $100 million revenue by the 7th year, that's fine. But you're going to have to defend that storyline that you are at some point going to become a very high velocity company, and it's worthwhile for the VCs to be patient early on to be able to reach that inflection point and the high velocity business. Not necessarily. It depends on what scale of an inflection point that is. If you start your inflection point on year 4, can you get to $100 million by year 7? That is the question. And I'm giving you kind of rough range, basically, but that's the ballpark. Okay. Any other questions, folks? Anybody? All right, we're going to adjourn then and see you back next week. For those of you who are planning to attend Rendezvous, see you in person next week. Bye-bye. Thanks for coming.